the price of gasoline, the cost of used cars and trucks, and the continued decline in inflation of the US dollar just guaranteed a Bitcoin bull market. Hey guys, what's going on? Jeb here, and in today's video, we're going to talk about how the continued decline in the inflation of the US dollar has all but guaranteed the complete and total transition of Bitcoin away from accumulation, which we have witnessed over the last 12 months, into a bull market. And in this video, I'm not only going to show you all of the different facets of inflation that are guaranteeing this, but I'm also going to show you on the Bitcoin and cryptocurrency price action charts how Bitcoin and many of its contemporaries have broken through critical resistance that shows that we are now just maybe one confirmation away from saying that we are in a full-blown bull market. But looking back, we are going to see that this past week was the week that the bull market that Bitcoin is about to go in, and is probably in when you're watching this video, began. April 10th is the date, and in today's episode, I'm going to show you why on that day, everything changed. So without much further ado, let's go ahead and dive right on into it. In case you haven't been watching this channel, this chart drives the Bitcoin price. I would highly encourage you to go back and watch this video, which you can see right there. And in this video, we talk about something that I call the CPI cycle. The Consumer Price Index is released about the second Wednesday of the month. And when it is released at 8:30 a.m., we see what the inflation of the United States dollar is doing. Over the last 4 months now, every single time that CPI data has been released, we have seen a major rally in Bitcoin. Again, if you haven't watched this video, it's a great precursor to this one. So let's talk about the CPI data release that just dropped and its impacts on crypto, and why it, among a few other things I'll show you, guarantees the start of a new bull market. And by the way, if you hear a little bit of cooing or crying in the background, our daughter was just born 3 days ago, and I'm still wearing the hospital tag, and my wife and my daughter are in the room with me. So shout out to Sarah and Charity. That's her name. You guys have been wanting to know. There you go. She is beautiful. She is in perfect health, and so is her mother. Let's get back on to the content. Over the last 12 months, inflation of all categories is now sitting at 5%. That is down from the 6% inflation year over year that you could see at the beginning of last week's video, where we talked about how this inflation drop that we just witnessed could cause Cardano to rally between to 50 and 77 cents. That means that the inflation of the United States dollar dropped from 6% year over year, that being March to March, to from April to April, 5%. That blows this chart that we talked about in that video I mentioned earlier out of the water. January CPI release, we witnessed a 0.6% drop. February's, we saw a 0.1% drop. March, we saw a 0.4% drop. As of April the 12th, we have now seen a 1% drop. And that drop is largely driven by two different categories having to do with the automobile industry. On this chart by NerdWallet, we can see the average price of gasoline in the United States over the last few years, going back to pre-pandemic levels around $2.25 per gallon. As you can see, in May of 2020, average gasoline prices in the United States dropped to $1.79. By June 2022, they had rallied all the way to nearly $5. Most importantly for our video, you can see in February of 2022, which was roughly 14 months ago now, gasoline prices took a major uptick at the beginning of the Russo-Ukrainian war. Why? Well, quite simply, Russia is one of the largest oil and gas exporters in the entire world, especially to Europe. So when Russia went offline and was, for the most part, embargoed, gasoline and oil prices shot through the roof, even though they were already rallying as a result of the pandemic. Within weeks, we saw gasoline prices jump by over 50 cents, and within 6 months, we saw them jump by $1.50. As we've now approached and passed the 1-year anniversary, what a bloody, horrible anniversary of the Russo-Ukrainian war, we have seen gasoline prices start to come down dramatically. That started to show itself in March and really kicked into high gear this April. March 2023, gasoline prices on average in the United States were sitting at $3.39, whereas March of 2022, they were sitting at $4.10. That was already a major drop from February over February, an ever so slight increase from $3.44 to $3.44. Now in April, that change has only gotten larger and will continue to grow over the coming months as we come down in a year over year level, moving into June and July especially. Last April, gasoline prices in the United States were sitting at $4.17. Right now, they're sitting at $3.50. That has led to the Bureau of Labor Statistics classifying fuel, oil, and gasoline as double-digit drops, leading to a large portion of all items moving to the downside by the 1% that we talked about, and causing the energy category of CPI to drop by 6.4% into deflationary territory. Comparing April of 2023 to 2 Aprils ago, April 2021, we're still up nearly 50%. However, comparing to last April, gasoline prices have come down dramatically. A note on that, coming in June, about 2 months from now, we are going to see gasoline prices likely be 35% lower, which will probably lead the CPI through even more deflation down into that 4% territory over the next 2 CPI data releases because of the massive spike in June of last year to nearly $4.90 on the national average. That, however, will be short-lived, and because that will be short-lived and it will reverse and gasoline will no longer be so deflationary, that will mean energy is no longer so deflationary, meaning that we could actually see a slight uptick in inflation moving into Q3 because we'll no longer have fuel oil and gasoline prices driving that to the downside. Now, as you can see from our table, it's not only fuel oil and gasoline that's leading to such a large drop in inflation. It also has to do with used cars and trucks. I am now a member of this market because my family actually just purchased a new vehicle because we now have 2 children. So I actually have a little bit of experience with this market firsthand, and vehicle prices are still much higher right now than they were 3 years ago, but they've come down dramatically from where they were 1 and about 1.5 years ago. Used cars and trucks were sitting at a huge premium, and now they've come down, and I actually have a chart to show you. Overall, my good friend Fred, that is the Federal Reserve Economic Data. You can find this website by going to Fred, F-R-E-D, St. Louis, S-T, Louis, Fed, F-E-D.org. Then you can come to this page and you'll see the average consumer price index for used cars and trucks. You can see moving into the pandemic, used cars and trucks moonshot on their CPI graph from around 135 points all the way up to 215 points. That was a 50% increase basically year over year. The CPI has started to come down dramatically on used cars and trucks from 215 January of last year all the way down to about 183 where it sits now. And in April, I would expect that that is going to be sitting, it hasn't updated yet, but that would be sitting right around 181. March to March, we dropped from 206 all the way down to 183. April to April, we're going to drop from 204 probably down to about 181, which is where we're seeing a large portion of this deflationary activity showing up. Those 2 markets, both of them having to do with automotive, gasoline, the petrochemical sector, and the used car and truck market have been bringing down the United States dollar's inflation by quite a lot. And that actually gives us quite a bit of insight as to why Bitcoin didn't rally as much as it has on previous CPI releases, even though we had a larger CPI drop than we've ever seen. If you look at the CPI, the reason that we've seen CPI drop by 1% is not because food's gotten cheaper necessarily, not because rent has gotten cheaper necessarily. The things that really impact the average American and what they're going to invest in, those things have not changed a whole lot. What has changed is gasoline, and what has changed are used cars and trucks, but they haven't actually dropped that much over the last month. They simply had a massive rally, a massive bullish movement, not great for everyone else, but a massive movement to the upside a year ago. Now that's coming under control, so it's kind of a quirk of data that we've seen a 1% drop this quickly, meaning that when people actually dig into what the CPI means, they say, huh, yeah, we've dropped 1%, but that doesn't actually mean a whole lot to me because that's a bit misrepresentative of what's actually going on in the real world. So that hasn't led Bitcoin into as big of a rally as we potentially hoped. I think we will go to 32,935 within the next month, but it might take a little bit longer. Point is, CPI has dropped by 1% in an unsustainable way that will likely evaporate over the next 6 months, but in doing so, it has led to a rally on Bitcoin, and in my opinion, it has even still, despite that caveat that I just gave you, guaranteed a Bitcoin bull market. And I'm also going to give you a couple of other technical reasons why I think that is coming soon. On April the 10th, 2 days before the CPI data released and 1 day before our daughter's 0th birthday, Bitcoin broke above $28,545 for the first time concretely. We had broken this level about a dozen times in a very much uncertain way. In doing so, Bitcoin broke above the transitionary zone that you can see right here, which we spoke about at length on in this video and has underpinned all of our analysis in the entire cryptocurrency market. You can find that video right there. Pretty cool editing, huh? Breaking above that transitionary zone means that Bitcoin has taken its first step towards bull market and now is on the hunt for confirmations. Well, the good news is multiple have come in. First and foremost, as we've spoken about in a previous video as well, you can find this video right here or up here, we have seen a buy signal come into play, a confirmed and a strong buy signal come into play nonetheless on the weekly chart with confirmation from Trendcatcher. On top of that, we've had a very, very eventful shift on the 50 and 200 weekly moving averages over the last couple of weeks. Now, many people have not liked my stance on this because everyone wanted to scream doom and gloom whenever the 50 crossed below the 200 weekly moving average. That represents roughly 1 in 4 years worth of Bitcoin's averages. Everyone wanted to lose their heads and run around like headless chickens when the 50 crossed below the 200 because it was the first death cross in the history of the weekly chart on Bitcoin. I told you guys 3 or 4 months ago that that was actually an early warning sign of a bull market because while we've never seen a bearish cross on those levels, Every time those two moving averages have come close, there are 3 times in history, we're about to begin a bull market or at least a multi-100% rally. We saw these two moving averages come to their nearest approach in October of 2015. Bitcoin would rally 6,700%. We saw them come to their nearest approach again in April 15th, 2019. They would rally the market 156% and actually lead into the pre-halving phase of the bull market, which we talked about in last week's video. The third and final time until recently that those two moving averages came close was here in September of 2020, and that led the market into its bull market, a $55,000 rally at 572%. Everyone was worried about these moving averages crossing, but the fact of the matter is the reason they crossed was because this bull market percentage-wise was much smaller than the previous, meaning that the 50 didn't get quite as far away, and the market had less room to correct to move down to the 200 moving average. This first bull market rallied us 10,000%. This second bull market rallied us 2,000%. That changes the way the moving averages works, and it makes it much more likely that you're going to have a bearish cross, even though it doesn't mean bearishness. So on the one hand, the good news is, well, we saw that bearish cross indicating a close approach. Duh, they crossed, which is a bull market confirmation, and we saw that the market went into a major rally the same week that that bearish cross happened. Now, however, we've seen a bullish cross, and golden crosses, paradoxically, are also bullish for the 50 and 200 on the weekly chart. You heard that right. The 50 crossing below the 200 is bullish, and the 50 crossing above the 200 is also bullish on the weekly chart. Quite simply, the reason for that is that bear markets are proportional in length to bull markets by about a 2-to-1 ratio. When a bearish cross comes in on the 50 and 200 on the weekly chart, normally, actually, every time historically, that has happened so far past the bear market's beginning that it's not a confirmation of the bear market starting. It's actually happening around the time the bear market's ending. However, a golden cross in the 5200, never having any history before, is naturally going to be a bullish thing, and it's also corresponding with the beginning of a bull market, meaning that both of these signals, one of which came out a week ago, are bullish, and they are both bull market confirmations. Last but not least, the other reason that I believe a bull market is now in its first stages of being confirmed, and again, I'd like to give it a few more weeks. I'd like to see it break up above 32,935, but some of the final reasons why I believe that Bitcoin has more or less confirmed a bull market at this point are to do with the fact that we broke above 28,545 with confidence on Bitcoin. That was the end of the transitionary zone. We've talked about that already. However, it wasn't just Bitcoin that broke above its transitionary zone. Ethereum and the total market capitalization chart did as well. You see, Ethereum has a transitionary zone as well. In the same way as Bitcoin, it is denoted with one level set on August 14th, 2022. On Ethereum, that level sits at $2,038. On Bitcoin, that level sits at $25,236. Ethereum also has another level that's set here on June 23rd, 2021. For Ethereum, that is at $1,677. On Bitcoin, that level is $28,545. You see, the Ethereum and the Bitcoin transitionary zones are dictated based on the exact same dates, and therefore they are technically identical, just on two different charts that are highly correlated. Ethereum, at least at the time of recording this video, is testing above its transitionary zone. It has not concretely broken above that transitionary zone. However, coming right down here and switching off of log onto linear, you can see that Ethereum has significantly broken above this uptrending level of resistance, which shows its uptrend clearly. In just the last week, therefore, Ethereum has rallied 15%. In the last month and change, Ethereum has rallied 54%, and in the grand scheme of things, is very close to threatening to break above its transitionary zone. And once it confirms above its transitionary zone, we will likely see bull market confirmation from Ethereum as well. Now, Ethereum and Bitcoin make up about 65% of all cryptocurrency market capitalization, so the total market capitalization chart is looking very bullish as well, considering Bitcoin and Ethereum are doing so well. In the exact same way that we have our transitionary zone calculated on Bitcoin and Ethereum based on our August 14th high on a total market cap chart that sits at $1.181 trillion, and based on a low that we set here on June 22nd, 2021 at $1.114 trillion, the total market capitalization charts has this transitionary zone. Now again, the total market capitalization chart just shows you the value of all cryptocurrencies cumulatively. Right now, they're sitting around $1.25 trillion. So too, total market capitalization chart has an uptrending level of resistance, roughly denoting the uptrend's inclination, the degree of its increase. Opposed to Ethereum, total market cap has just come up and tested it as resistance, but total market capitalization, unlike Ethereum, has been above its transitionary zone now going on 5 days, whereas Ethereum is threatening to fall back below that transitionary zone over just the next couple. That means now that the three most important charts in all of cryptocurrency, Bitcoin's chart, Ethereum's chart, and the total market capitalization chart, all three of them, at least for now, are above their transitionary zone. Why is that important? Well, the transitionary zone demarcates the zone that you transition from accumulation phase into bull market. Why is that significant? Well, if you'll remember from this highly circulated chart that I put out about a month ago, being above 28,545 means that we're in the pre-halving phase of the bull market, meaning that we're probably not going to see 700% rallies, but moving into the halving, we're going to be pretty bullish. It is very possible, therefore, that if Bitcoin is able to hold above 28,545, especially if it's able to rally to 32,935 over the next few weeks, even if it just tests it, rejects it, and pulls back down to 28,545, honestly, if Bitcoin does anything more than run out the clock and hold above 28,545 through the end of April, in my opinion, that gives us about 8 out of 10 confirmations that I'm looking for to say that a bull market has begun. I would like to see us stay up here for a few more months. I don't mind waiting for 2 to 3 months of data before confirming a bull market based on my analysis, because bull markets are multi-year events. I am totally fine with giving the market more than 3 or 4 days to confirm the bull market. Bitcoin's bull market is basically all but guaranteed right now. The US dollar is shouting it's guaranteed, but of course it's not the only voice in the room. My friends, you've been excited to hear this news all year. You've been wondering, is cryptocurrency about to move into a massive bull market? I'm here to tell you that while I cannot be totally certain, because no analyst ever can be, I am highly confident at this point of 2 things. Number one, our grind above 28,545 is probably going to be a little bit harder than you might think. We may come back down and backtest 28,545. We might drop below it. We may see a correction down to 25,236. But so long as we stay above that transitionary zone, even if we drop into it for a little while, moving over the next month, and we see an even bigger CPI drop, moving into June and July, which we'll likely see as a result of what I talked about, used cars and trucks and fuel oil, we're going to see a big rally on Bitcoin. And I think that with Bitcoin being up here above $30,000 at the time of recording this video, trading around that zone, you're going to see quite a lot of money flow into the space that has been out of the space for years or has never been in the space at all. And that's very exciting. But look, I want you guys to be very successful in the cryptocurrency market. I want you guys to find financial sovereignty for yourself in the way that people have always done that, no matter the career, no matter the field, no matter the industry that they find themselves in, has always been through education. A heart surgeon is never going to be successful and make $400,000 without going to school and learning how to perform that highly valuable trade very, very efficiently and safely. A mechanic is never going to make $50 or $60 or $70 an hour if they have just learned nothing and they don't even know how to change oil. I wouldn't be a very good mechanic because I haven't invested my education on that, but I have invested thousands, at this point tens of thousands of hours in technical analysis in the cryptocurrency markets, and therefore I have an education in technical analysis that allows me to make money in the cryptocurrency space. And I want you to have that freedom that I've found as well, that financial sovereignty that I've found as well, that has blessed my family in so many different ways. And because I see the value in education, and because I see the value in cryptocurrency technical analysis, about 4 years ago, I decided to combine them together and teach cryptocurrency technical analysis so that you guys could unlock the benefits that I've managed to unlock in my life. And that's where Club DeFi's Principles of Technical Analysis comes in. If you have not already, I would highly encourage you to go to the first link in the description box down below, go and sign up for Club DeFi's Principles of Technical Analysis and get access to over 60 videos where we're going to teach you everything that you need to know about technical analysis so that you can hit the ground running and make a lot of money in this space. Guys, the market is always shouting information at you. The market is always shouting, buy me now, sell me now, dollar cost average now, accumulate now. It's always telling you what you need to do to be successful. Your job is to be able to listen to those signals. The way that you understand the market, the way that you understand the communication that it's trying to share with you is by speaking the language of technical analysis. And that's why we've created what I believe is the greatest educational resource in the history of the cryptocurrency industry for learning technical analysis. And that is Club DeFi's Principles of Technical Analysis. I would highly encourage you to join, get invested in your education so that you will be able to make investments that will be very profitable, trades that will be very profitable moving into this coming bull market. If you enjoyed today's video, make sure to hit that like button, subscribe to the channel, and stay tuned for after today's outro, because I got a little bit of a Easter egg for you. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace. Oh, I got a real good feeling. Got a real good feeling. Like there is lightning deep in my bones. Yeah, I got a real good feeling. I won't hit no ceiling. I'm going higher than I've ever known. I got a real good feeling. You say hi to the camera? Oh, now you want to be all quiet. You're so cute.